Hello everyone and welcome to Fluent Financial's What You Should Know for the week of February 28th, the last day in February. My name is Mike Lanise and I'm your portfolio manager at Fluent Financial. This past week the Dow was slightly down 0.06% while the S&P was up 82 basis points and the Nasdaq was up 1.08%. Indices reversed after weakness earlier in the week and rallied big on Thursday and Friday due to the Russian invasion and then the strength of the sanctions imposed. WTI crude oil settled up 1.5% at 91.59 for the week, but fell well off of Thursday's peak of just over 100 a barrel. Economic events we saw this past week were January's core PCE index rising 5.2% year over year and 0.5% month over month, which is the highest level since April of 1983. Consumer spending continued to accelerate despite high prices jumping from 2.1% month over month versus an estimated 1.6%, while wages surged 9.3% in 2021. Durable good orders also rose 1.6% in January. Consumer confidence faded for a second straight month in February amid inflation pessimism. The second estimate of the fourth quarter GDP ticked up to 7% from the initial 6.9% we saw. And finally, rising mortgage rates and record high home prices led to a 4.5% drop in new home sales and a 5.7% slide in pending home sales for January. So what happened this past week? Unless you were under a rock, you saw that Russia invaded Ukraine. And markets rallied as sanctions on the Russians were seen as less severe than initially expected, while expectations around a Fed policy path were also a bit of a tailwind, as market pricing for a 50 basis point rate hike in March fell following the invasion. Rising energy costs amid this geopolitical turmoil could ultimately force the Fed and other central banks to tighten more than markets currently expected if that is causing inflationary pressures. Disappointment over the Q1 guidance showing a slower earnings per share revision and rising fears of further margin pressures from wages is also putting pressure on markets and the slowing growth of the marketplace. The consensus for the Russian-Ukraine conflict is that it will end quickly, but the full extent of Putin's intentions in Ukraine remains unclear. Year to date, the Dow Jones is down 6%, while the S&P is down 7.8%. And the Nasdaq is down 12.37%. Looking at the week ahead, last week's events jolted investors, and the fallout will continue to be assessed on both a human and economic level, along with what the world leaders take beyond the already imposed sanctions against Russia. Over the weekend, sanctions on the SWIFT international banking system, as well as Russia putting their nuclear sites on high alert, have markets opening up much lower on Monday than what we saw after Friday's close. This week's economics calendar is busy, highlighted by the U.S. employment report coming this Friday. Over 1.6 million jobs have been created the past 3 months despite the impact of COVID variants, and another strong report may put further pressure on the Fed's tightening schedule. Fed Chair Jerome Powell is set to testify before House and Senate committees this Wednesday, as well as OPEC meeting on Wednesday, and despite facing additional threats and already tight oil supplies, the group seems unlikely to raise production beyond its planned increases. The Bank of Canada is widely expected to raise its rates this week, and in Europe, the February CPI figures could intensify calls for the European Central Bank to end asset purchases and begin raising rates. Feel free to leave comments or questions to this post. Click the like button and share it if you felt that it was informative. Subscribe to our YouTube channel and visit our fluentfinancial.com website for further information. As always, thank you for tuning in and have a great week.